Hi everyone, welcome back to another episode of Charting Markets with Jeremy. So for today, let's take a look at WTI Crude Oil, especially seeing kind of some of the rebound playing through over the past 1 week or so. I think we are kind of watching the general uptrend resuming in play right now for the WTI Crude Oil. So on the screen, you can see the WTI Crude Oil on the daily time frame chart. And just to highlight, you can see since early July, we've actually went through quite a bit of a correction in price, with WTI actually falling about 15% or so before seeing some rebound playing through over the past 1 week. And in fact, what we saw was actually a bounce off a rather strong cluster of support, mainly over here at this black line, which is the uptrend line, as well as this support at around $65 psychological level. So in fact, if I were to pull out the Fibonacci retracement level over here, you can see we actually also bounced off another support level, mainly at this 61.8% Fibonacci retracement level over here. So it's not surprising that WTI actually bounced off at this level over here, mainly because there was actually a rather strong cluster of support over there. And the key price action that actually developed since then was actually the rebound on this day, 21st July, where we actually kind of managed to recover back above the 60-day moving average on 21st July, which I think is a very key important point over here. If you look historically, how WTI actually reacts with the 60-day moving average, which is the blue line. And after actually closing back above the 60-day moving average, the subsequent follow-through was also rather strong, where we managed to actually close above the 20-day moving average, which is the red line for over the past 4 to 5 trading sessions. So in fact, you can see the general momentum right now is slowly picking back up. And I think with that bullish price action that we have seen over the past 1 week or so, likelihood is the uptrend has actually resumed for WTI crude oil. And probably just to point out some interesting historical price action in relation to some of the moving averages, you can see going back since March, every single pullback that we have seen was actually being held up pretty firmly by the blue line, which is the 60-day moving average. So you can see over here, back in March and April, we got 2 retests of the blue line, and every single one of them was actually firmly held up by the 60-day moving average, similar to the one that we saw back in May. But this pullback was also eventually being held up by the 60-day moving average, followed by a rebound back up higher. So I think it's crucial that even though we actually broke below the 60-day moving average somewhere in mid-July, the recovery was actually pretty quick, and we actually managed to recover back above the 60-day moving average, which tells us that the general uptrend is back in play. And probably just to highlight another interesting fact is you can see the March sell-off over here, where WTI actually went into a correction of 15% or more over this period of 3 to 4 weeks. It was actually being held up by the 60-day moving average once again. And I think this correction phase that we are seeing right now is pretty similar to the one back in March, where we also fell in the range of around 15% or so, but this time around with a shorter magnitude of 2 weeks before we see this rebound back up. So with that in mind, the last time where we actually saw this correction, you can see WTI actually rallied for about 30% or so before it actually went into the current correction phase. So it wouldn't surprise us to see a similar magnitude move to the upside right now, since we have actually went through a kind of a decent correction that we have seen over the past 3 weeks or so. And henceforth, with the bullish price action that we are seeing right now for WTI crude oil, some upside target that we have in mind, first one would definitely be the immediate high at $77. And I guess the more feasible target in mind for everyone would be the $80 psychological resistance over here. And a more optimistic one would be for a further breakout higher to retest probably the resistance overhead at $84. So all in, the upside that we have in mind that is more feasible will be somewhere near 9% upside, followed by somewhere near 15% upside over there. And as for the downside support, we'll be looking out for this support at around $69.80 to hold. That is also where the 60-day moving average is at. So if and when we actually do get a correction here in the near term, we are looking at somewhere near 3.8% downside risk. But do take note that if you were to fall back to this level, likelihood is for us to see a further rebound playing through at this level over here at $69.80. And moving on to the stock picks that will likely do well in a rising oil price environment. The exploration and production company, one of the larger cap ones, ConocoPhillips, ticker code COP. You can see the general correlation to oil is pretty high here as compared to oil prices. And general trend for ConocoPhillips is pretty much still showing us a nice strong uptrend, forming a series of higher highs and higher lows. And in fact, more recently, after going through this similar correction phase since early July, we have managed to actually bottom out and bounce off some key support level, mainly at this 61.8% Fibonacci retracement level, as well as this $53.56 resistance turn support level over here. So probably with the rebound that we saw over the past 1 to 2 weeks or so, the bottom has actually been established at this low at $52.81 for ConocoPhillips. And you can see following that rebound higher in price, we have actually went into a consolidation range over the past 1 week over here. And again, with the expectation that oil prices is ready to actually kind of climb higher, I guess it's inevitable that ConocoPhillips will eventually break out above this 1 week range here. And if we can get this breakout above this $57.40 range high here in the near term, then we would expect this general uptrend to resume. And some upside target that we have in mind is the first one at $63.57. That is the recent high. And a more feasible target that we have in mind is around $67 to $70 over here. So in terms of upside wise, we are looking at probably somewhere near 17% to 22% upside, probably playing out over the next 2 to 3 months. And covering the downside, again, the key support that we'll be watching out for further buying, further accumulation, if there is any weakness, will be somewhere near the $54 to $53.56 support level over here. So possible downside risk here, we are talking about somewhere near 5 to 6% downside risk here for ConocoPhillips. Yeah, so that's all I have for you guys today, and we'll see you guys in the next one.